If you believe that India is going to grow rapidly over the next decade, there's one theme that would play a very crucial role: energy. Because whether it is manufacturing, data center, electric vehicle, air conditioner, or simply a rising standard of living, all of them are going to need a lot more energy. And let's be honest, the recent geopolitical events have proved that if India wants to become a $10 trillion, $20 trillion economy, we cannot remain dependent on other countries for something as fundamental as energy. We have to become self-reliant. In fact, we are already seeing massive investments happening across the energy sector. India is targeting 500 gigawatt of non-fossil capacity by 2030 and has now crossed 300 gigawatt. Power transmission alone could see around 9 lakh crore of investment through 2032. NTPC alone plans to invest around 17 lakh crore by FY37. India's transmission network is planned to expand from 4.98 lakh circuit kilometer in November 25 to 6.48 lakh circuit kilometer by 2032. But if you want to invest in this theme, the obvious question is, which stocks do you buy? Do you buy Reliance, NTPC, Power Grid, ONGC, Coal India, or maybe some of the companies supplying equipment to the power sector? And that's where it gets difficult. Because you may be right about the energy opportunity, but that does not necessarily mean you may pick the right stock. And honestly speaking, stock picking requires a lot of hard work. You need to do thorough research, ensure that you buy at right valuation, and stay updated with the latest development. For a person with a job or business, it is not an easy task. But what if you could simply invest in the entire energy basket, and that too at a very low cost? That's what I want to explore in this video. So there's an index called Nifty Energy Index that can help you participate in India's energy theme without trying to pick the right stock. So in this video, we'll discuss why energy could be a very interesting long-term theme for India. Then what companies are actually part of this index. And finally, we'll look at the NFO of Axis Nifty Energy Index Fund that offers a very low-cost passive way of investing in India's energy theme. Alright, let's get started. So let's first understand why I think the energy theme could be interesting over the next decade. So there are three big drivers that can support this theme. First is simply rising energy consumption. India's per capita electricity consumption is still significantly lower than many developed economies. But as income rise and the economy becomes more industrialized, our energy consumption is going to increase. Think about your own life. A middle-class household today probably has an air conditioner, refrigerator, washing machine, TV, laptop, smartphone, and a lot of other appliances. And then you add electric vehicles to the mix. Now multiply this by hundreds of millions of households. At the same time, India is trying to become a global manufacturing hub. We want more semiconductor fabrications, more electronic manufacturing, more automobile production, more data centers, and more industrial capacity. All of this requires electricity. And that's why I think energy demand is not simply linked to GDP growth. As India becomes richer and more industrialized, its energy consumption is also likely to rise significantly. Then second driver is electrification. We are gradually replacing things that traditionally used fossil fuels with electricity. The most obvious example is electric vehicles. But EVs are just one part of the story. We are also seeing increasing electrification in industrial processes, railways, heating and cooling, and several other areas. So even if the economy grows at a healthy pace, electricity demand can potentially grow faster as more activities shift towards electricity. And the third driver is something I mentioned in the introduction: energy security. India imports a large part of its crude oil and natural gas requirement. So if we want to become a $10 trillion or $20 trillion economy, we need to reduce our dependence on global energy markets. That means investing heavily in domestic energy production, renewable energy, nuclear power, transmission infrastructure, storage, and the entire supporting ecosystem. And this is where the opportunity becomes quite interesting. Because we are not talking about just one industry. There will be companies generating electricity, companies transmitting and distributing it, companies supplying turbines, transformers, cables, and other equipment, and companies involved in solar, wind, nuclear, and other forms of energy. At the same time, conventional energy sources like oil, gas, coal are not going away overnight. So there's a very large ecosystem that can potentially benefit from India's growing energy requirement. And that brings us to the next question. If there are so many different companies that can benefit from this theme, how do you actually invest in it? And that's where your Nifty Energy Index becomes interesting. So if you visit Nifty Indices website, within thematic index, you can find Nifty Energy. Now if you look at its fact sheet, it says Nifty Energy Index include companies belonging to petroleum, gas and power sector. The index comprises of 40 companies listed on NSE. Now if you look at the top constituent, it includes Reliance and ONGC with around 10% weightage, followed with Coal India, then NTPC, GAIL and so on. To get the list of all 40 companies, you can explore Index Constituent tab. My observation is that Nifty Energy Index is predominantly large cap focused with around 72% weightage, and remaining is mid and small cap. Basically, you are getting exposure to traditional energy, power generation, transmission, renewable energy, and companies supplying equipment and infrastructure to the sector. This is actually one of the things I like about Nifty Energy Index. Because if you make a very specific bet on, let's say, solar energy, so you are assuming that solar will be one of the biggest beneficiary of India's energy transition. But with the Nifty Energy Index, you don't have to make that call. You're essentially saying that regardless of which part of the energy ecosystem ultimately wins, India's overall energy requirement is going to grow and companies participating in that ecosystem should benefit. Now, as far as returns are concerned, Nifty Energy Index has generated around 10% return in last 1 year, significantly outperforming Nifty 500 Index. In fact, if you look at 3-year, 5-year, 7-year, 10-year period, this index has consistently outperformed Nifty 500 Index. However, it is not that Nifty Energy Index is completely risk-free. There are risks involved. Commodity prices can be extremely volatile. Government policies can impact some businesses. Large capital expenditure can take years to generate return. And because this is a thematic index, valuations can also become expensive when energy theme become popular. This is why I would look at Nifty Energy Index as a satellite allocation rather than something that replaces a diversified equity portfolio. Your core portfolio can still be built around your broad market funds, but an energy index can be part of satellite portfolio if you have a strong conviction that India's energy ecosystem is entering a long-term growth and investment cycle. And this brings us to the recent NFO of Axis Nifty Energy Index Fund. Because the interesting question is not just whether the energy theme is attractive. The real question is, if you want to participate in this theme through a passive fund, is this particular NFO worth considering? So first thing I want to clarify is that Axis Nifty Energy Index Fund is a passive mutual fund. It means Axis Mutual Fund is not trying to identify which energy company will outperform. The fund is simply trying to replicate Nifty Energy Index, subject to expenses and tracking difference. And that's important because in my view, the attraction here is not really the fund manager's stock picking ability. The attraction is the underlying theme and the index methodology. The fund is currently available through NFO route, which is open between 7th to 21st August, and you can start with as little as 100 rupee. There is no exit load if you redeem after 15 days. Expense ratio is to be announced. And this NFO is available on all platforms, including Axis Mutual Fund website and app. But there is one thing. I would not get too excited about the fact that this is an NFO. A lot of investors look at 10 rupee NFO price and think they are getting the fund at a cheap valuation. That's not how it works. A fund launching at 10 rupee is not cheaper than another fund with an NAV of 100 rupee. The NAV simply tells you the value of one unit. What actually matters is the index you are investing in, the portfolio you get, the cost of fund, and how closely the fund is able to track its benchmark. Now, the final question we should discuss is who should actually consider a fund like this? So if you have a long-term view that India's energy consumption is going to rise significantly, that the country is going to invest heavily in power generation, transmission, and energy infra, and you want to participate in this theme without trying to pick individual winners, then an energy index fund can make sense. It can also make sense if you already have a diversified core portfolio and want to make a small satellite allocation towards energy theme. So this is it from my side. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.